Hello there, Greg here from Master Trader. Let's talk about technical analysis from the point of view of psychology, institution psychology, trader psychology, whoever it is. They're placing bets with their money in a belief that something's going to go up or down or sideways. So I've picked Zoom Video Communication, symbol ZM. You might remember the pandemic, that crazy time where we were all stuck at home. Well, this company was created a little bit before then, and then so many started using it to do business online. If you remember, even funerals, how sad as that was, funerals in Zoom. But it was a way of everybody getting together through the internet. And it had an amazing run. And eventually it started to move vertically to the upside and became climactic. And so from that point, of course, there's going to be some profit taking. Now, profit taking can happen in different ways. Sometimes it's just a little consolidation, more whippy consolidation, and then as the story unfolds, you get this accelerated move that communicates that the majorities are now together in a strong belief that this thing's going to probably go up forever to the moon, who knows what. And then as profit taking begins, and we know as that story unfolded about the pandemic and more people started to be able to go outside, go back to work, it started to get sold. And then at that point, we're not so sure whether it'll just consolidate as it comes down to the next level of support. Here we always saying look to the left to see where there's a support area. Where were there buyers and sellers before? That created some area of congestion or a pivot. A pivot is a bar marked with three higher lows to the left and right. It could have 4, 5, 6, but has to have a minimum of 3 for a pivot low and vice versa for a high. When there are no pivots, that means that the trend is strong because it doesn't pull back. So after looking to the left, this thing bounced a bit and then started going down again. More people started going back to work. And the idea of this becoming something that people would continue to use. And people still use it today in a very big way, but not to the extent back here. So it started going down and down and down as more and more believed that it wouldn't be used in the way that it was here. And as you can see, over the last few years, it's just been basing here, going sideways, doing nothing. But there are little spurts, and you can see the volume spike right there, where, for whatever reason, it starts to get bought and it pushes up a little bit. And there's going to be a lot of people looking to sell a stock like this that bought it up here or here or here, and for whatever reason. And they're just happy to be done with this pain in their portfolio. And so then things tend to go, let's just say, dead, flattening out and flattening out. And it could possibly be a period of accumulation, or it may be the next phase of going sideways where there are hopes. Hopes are dashed, and then it goes down again. But when the volatility contracts in such a way, well, there is the potential for the stock to go back up. Now, is this going to go back up to $600? Probably never. That doesn't mean we're not interested on a short-term basis for a trade, swing trade over the course of several weeks, maybe a month, but we want to zero in and go to a smaller time frame. So multiple time frame analysis is a big part of what we do. Where has a stock been in the past? What has it been doing presently? Are there signs of accumulation? And so when we see volume spikes, like there was here, didn't do much, and we're condensing the data, of course. I've got a little note there. I put notes on charts. I like doing that, and just to see what was being said at the time, and just curiosity. Oh, see, there was an upgrade back at that time for Zoom. So you can put little notes on your charts and see what's happening. So interest began to grow in 2023 that maybe Zoom could move up. Well, it didn't do much of anything. And as I said, we're condensing the data. As we expand it, we can see, some larger movements from pivot highs to pivot lows. And one of the concepts is as these pivot highs and lows begin to get tighter and tighter, there becomes more of a agreement between buyers and sellers, and possibly the start of a new trend. So let's go down and take a look at a daily time frame. So when we see explosive moves like that, with this type of volume, it means institutions are involved. These aren't short-term traders. There isn't day traders. This isn't mom and pop. This isn't some prop firm creating such an explosive move. These are institutions, and most times these institutions move as a herd. And they all come together. Whatever they're looking at, whatever news, whatever analysis that's coming together, they believe that Zoom is going to be a stock that's going to go higher. We always think, well, higher to where? I said it's not going back up to $600 in the short term. But look at the depth of retracement here, where from this low, it made a new low at that time, and it pops back up and it explodes up into this resistance area. So what we want to see is that a move moves in deeply into a resistance area, and we call that absorbing supply. Right? This resistance or supply is being absorbed. Now, that explosive move creates potential for selling out there. Remember, people will be happy to get their money back that bought it over here. And it creates what we call a price void down below, where possibly could this thing fall all the way back? Well, of course it could. But we start looking for some details about what's happening between buyers and sellers. And so we see this pivot low here, which means that buyers stepped up. Not in a big way, but it created a pivot, higher lows to the left and right. Now, what happened last week was this big, nasty, dark bar suggested it would go lower, but it didn't yet. There's still nothing to do. We're observing what's happening here with Zoom. So sometimes a pattern like this, where it forms that pivot and it takes out these highs, it would start to move up. It didn't. We don't know what's going to happen, but as we get more data, more information, it begins to build on that. And when we have a greater probability of prices moving in a more meaningful way. So what am I looking for this week? Well, we've got this low. I see this big, ugly, dark, wide range bar that would suggest it was going to go lower. Well, it didn't. Right? It gapped up the next day. And then the next day, there was a slight gap down in the difference between the close and that open, and buyers stepped up again. Now what we're going to do is set an alert up here to see if that buying continues. And if it does, it's going to have the potential to move up. So as we look at technical analysis through the eyes of it representing what others believe with their money versus using indicators, which creates uncertainty about which indicators, what settings, and so on, we see that this had an explosive move on volume. There's institutional interest in this stock. There were buyers on a pullback. When there was an attempt to move down, there was some aggressive selling. There wasn't a lot of volume, wasn't big volume. There was a bit of an increase in volume here as it started to move up. But now it's recovering from this sell day. And if it can take this out, I believe, based on that, this is going to go up. Up to where? Well, possibly up to this area. We'll see from there. So I hope you find this helpful. Hope you can think about removing indicators from your charts and looking at price data in this manner. As always, if you have questions, email me, Greg at Master Trader.